Hi everyone, welcome to BattleFin's TECH.M.E event. This is covering technology, media, and entertainment. As always, special thanks to our sponsor, Amazon Data Exchange. Really appreciate all the support and to see the growth that's happening. If you're a data provider in the audience, not only should you be listed on Ensemble, but contact us. We'd love to get you listed on Data Exchange as well and help really get you more exposure through that partnership. We have an awesome lineup today and tomorrow of different speakers. We're even changing things up a little bit where our first panel, we're actually going to have the CFO of UMC and really dig into the semiconductor shortage, when that's going to end, going to the source, and then also recommending some alternative data providers that they should be looking at to really try to figure out a lot of the issues that they could see in the supply chain or kind of other areas. We have, as always, some exciting announcements. As many of you know, we have our BattleFin Year Ahead in Alternative Data event going live January 26th and 27th in Miami. We're actually going to be rolling out a whole track around Bitcoin and really digging into the crypto market. I think you'll see some other things coming in September that are going to be exciting. We're targeting about 100 alternative data sets that are going to focus on the crypto area. So if you're looking in to try to understand that space or already playing it, we're really trying to create the de facto platform for finding data sets that can generate signals. So please keep an eye out for that. For the data buyers in the audience, this one I think will hit home. We're going to be launching a BattleFin buyer directory inside of Ensemble. And the goal for the data buyers that are going to participate in this is really less time being wasted, not only with the sourcing aspect, but how data providers can communicate with you. What way do you prefer to be pitched? What specifically are the steps that data providers need to go through to get in front of you? And what we're really trying to do is, as always, is accelerate your evaluation process. If you'd like to be a part of this data buyer directory, there's no charge, obviously. You can sign up today. Todd will put the link in the chat right now so you can get going. I think we already have over 250 profiles filled out, so we'll be launching that in the fall as well. And then finally, just to touch on the data dashboard products that we're rolling out. We're really looking for more data providers that are looking for ways to have use cases and KPIs visualized. So think about these as white papers, but in a data dashboard format, and much more intriguing, I think, to the data buyer audience. So how it works: we ingest your data, we normalize it, and then we do calls with you to figure out what insights we've seen, as well as what we can display from a KPI standpoint. And where we really think this is going to be powerful is a sales accelerator tool. So your sales team will get logins to Ensemble, and they'll be able to actually show the different use cases to potential clients. So if you're interested in learning about that, you'll hear about it in a couple of the different presentations. I strongly would push you guys to take a look at this. I think it's going to be a really game changer for the space. So without further ado, let's get day one started. We've got an action-packed day, and we'll kick right into the UMC panel.
Welcome to BattleFin's Virtual Discovery Day. Coming up next, predicting the end of the 2021 semiconductor chip shortage. Production, allocation rates, consequences, and predictions. How will companies like Intel, GM, Ford, and Tesla be affected? Joining us today is Chi-Tung Liu, Chief Financial Officer at UMC, the United Microelectronics Corporation, a leading global semiconductor manufacturer. Stephen Fox, founder and CEO of Fox Advisors, a sell-side equity research analyst covering electronic supply chains, automotive technologies, and storage products. And now, please welcome your moderator, CEO and co-founder of BattleFin, Tim Harrington.
Welcome, everyone. Thanks for joining our Tech.M TECH.M.E, which is Technology, Media, and Entertainment webinar. A pretty exciting space to be in these days. And as you heard from the intros, we have an awesome panel for you today. We probably get 5 or 10 questions from data buyers looking to figure out what's going on in the semi supply chain, what's going on with pricing. And today we're just really lucky to have Chi-Tung Liu and Steve Fox joining us. We're going to dig right into the topic. We have the experts. We go to the source, and we can even hear what the street's saying and what the questions they're getting. So let's dig right in. I guess, Chi-Tung, we see it from an investor and a data side. What's really gone on with the chip shortage over the last year and a half? How did it start? And if you could set the stage for what's really going on.
Well, certainly we all know the chip supply is in shortage right now. And we think over the past year also, the pandemic has accelerated the momentum in digital transformation, i.e. through work from home, homeschooling. So the demand for notebook PC, for Wi-Fi, for all the Wi-Fi connectivity devices has accelerated. So that certainly increased the demand side. And as for the supply side, because of the pricing for the semiconductor devices over the past few years, it has somewhat limited the intention, the motive for manufacturers, including ourselves, to bring on more capacities over the past few years. So that actually caused the structural shortage for chip supply. So we think the pandemic has accelerated the whole demand, and the supply side hasn't really increased and causing the chip shortage for right now we are seeing.
And how about specifically in the automotive space? Because we hear a lot of things over in the US about the big OEMs not being able to keep their production lines going. If you can give us a little background on automotive versus telecom versus some of the video sides, and where there's the supply is getting worked out, where there's pain points, and I think our audience always wants to kind of understand why is the autos having so much trouble right now getting access to these chips.
Yeah, as far as we know, auto industry has been running a just-in-time inventory control system, and they were kind of back off a bit during the start of pandemic. And when they try to come back, the momentum I just mentioned for work from home and homeschooling has already resulted in strong demand for notebook, for Wi-Fi, and kind of took over the capacity allocation used to be for automotive industry. And it's a little bit difficult for them to come back, and yet at the same time, they don't really have enough inventory to cover the temporary disconnection for their chip supply. So they are getting back to normal, but the overall demand is so strong. So any extra wafer capacity seems to be rather difficult at the current stage. So I think it may still take some more time for auto industry to be really back to normal. And on top of that, I wonder if they are really willing to continue the just-in-time inventory control system, and they may want to increase the level of inventory just for a buffer reason. So altogether, it may still take a short while for auto to really go back to a balanced situation.
Gotcha. And Steve, does that match up with what you are seeing, or what are you kind of hearing from investors?
Yeah, I mean, it definitely matches up with what we're hearing, except the only thing I would add to it is that you can broaden out some of these supply situations beyond semiconductors. So if you think about what has happened with prices on metals like copper and aluminum, you think about prices on steel, you think about oil prices going up, which affects resins. You've seen a lot of input costs go up that affects things like cables and connectors and enclosures. And that's also creating inflation that's being passed through to customers. There's examples of that on LCD glass as well, where supply is tight and panel makers are trying to refill channels as well. And so to T-Chung's point, supply chains are pretty bare. There's been a lot of inflation. The automakers have definitely done a lot of analysis within a vacuum, not considering what has been a rebound and a surge in demand in other markets. And so it's all compounded on it. And then, of course, you've had some different natural disasters and some, plants go down, et cetera, and other COVID-related things, which have just exacerbated other supply chain problems.
And I guess, Chi-Tung, you know what BattleFin does. We've discussed it. We have 2,000 data sets on our platform, a lot with the historical data right there, sandbox environments to work on it. More from the corporate side, and even being in the semi industry, what would you want to see? Like, what if you had a crystal ball of data? What would be some of the things that you look at the business and would say, if I could just see that, it would help me, or if I could just know that, it would help me? Are there any kind of spots that you see like that?
Oh, of course. For the supply side, we kind of have good control for most of the manufacturer around the globe who is bringing up what kind of level of capacity or what technology. So we have a database showing the potential semiconductor supply. But on the demand side, it's rather difficult. Of course, we don't really think there can be a firm answer for the real overall demand for semiconductor. But take one step backward. We would really like to know how the inventory level in the channel, because that's the part really flurrying our view for the customers' real demand. Also, when there's a shortage like this right now, our customer tend to so-called double booking or double ordering, and that will further disrupt our visibility for the true inventory and eventually the true demand. So I think double ordering will be the data point we really like to see clearly.
Well, you've come to the right place. I'll share my screen here, and what we do is we have something called Data Hunter. So this is where people would actually go in and kind of start searching for some of the data sets that they want to see the answers to. But one of the things that we also would recommend is people just going right into our catalog. And when I think about what you're looking for, it's on the demand side first. I might look at email receipt data just to see what trends are coming through. Are people buying PCs? Are they doing things that maybe it's on the cell phone side that I could scroll through and pick up some insights, or maybe even go back and you did mention the supply chain. Looking at some of the vendors like a China Scope, or some of the ideas that can show you where these shortages or constraints may be happening, especially in like the shipping or different areas. So once again, once the conference is kind of over, we'll send you some ideas on how you can get not only the demand side but also the supply side, because I just think what alternative data brings to the table is really, it goes beyond finance and can really start helping a lot of the corporate customers that we're starting to work with. So I guess that the double bookings, Steve, do you hear a lot of that? And even that must make it hard from a UMC perspective to figure out what demand looks like for the end of 2021 or even going into 2022. So help Chi-Tung out here. Like, what are you seeing for 2021 and 2022?
Yeah, I mean, I wish I had that crystal ball to say exactly. That is the big question. I think most of the investors that I talk to are very skeptical of the book-to-bill numbers that you see from distributors, for example, or that you don't see from distributors because they're so high they're embarrassed to show them to the street. I think there's a limited number of companies that are using the words double booking when they talk to Wall Street. And the reason is because the orders that they're seeing are extended out beyond, the typical 90 days. So they're looking at 6 or 9 or 12 months. And so not counting those necessarily as second or third orders. Distributors also try to double check a lot of customers' orders to the extent that they can. It's hard to say, but that's the really difficult piece of the puzzle, especially when you're looking at 35% of global semiconductor sales go through distribution channels, mainly with two large guys. And those two companies are serving thousands of smaller and medium-sized businesses. It just makes for a challenge in terms of seeing where things are going to excess in terms of double ordering.
Yeah, and I guess that leads me to the next question, which is capacity. Why aren't we seeing more capacity being brought online? I guess Chi-Tung, is that something you guys are thinking about, or how do you think about adding, or the capacity issue?
Well, even we want to bring on new capacity, it will take at least 2 to 2.5 years to have those capacity available for our customers. So there's a huge time lag. And also, as I mentioned earlier, over the past few years, the economics for building a new capacity, especially for more mature technology, wasn't justified based upon the selling price. It's gradually come to the point that company like ourselves are considering to build new capacity based upon current market price. But still, the semiconductor cycle change very quickly. And unless there's some kind of risk sharing model, it's very difficult for manufacturer just to put the trigger because of the current shortage and waiting for capacity to come on stream 2 and 2.5 years later. So yes, I think companies around the globe for semiconductor are building new fabs, new capacity, new supply, but it won't be like overwhelming, and also it won't be quick enough to solve the current issues.
Gotcha. And I guess, Steve, one of the other topics that came up was, these storms in Texas. How did those affect things, and why did that have an effect on, kind of this space?
If you start off with just sort of the base case that Chi-Tung laid out in terms of what happened with supply, what happened with pricing, which discouraged capital investments, and then you layer on something like a storm in Texas that took down a major semiconductor plant and also took down, it basically shut down the resin supply chain for several days, and then it took several days or weeks to bring it back up. Those things are disruptive. And so when you were already running lean in general on semiconductors and resins that are used, say, for the jacketing of enterprise networking cables or for making connectors and things like that, it just created more disruptions in the system. A more recent one to watch is the fact that the Malaysian government has put some workforce restrictions on manufacturing starting late May all the way through June 14th. And so companies like Jabil and Plexus and Flex, which produce significant amounts of products in the region, have only been able to bring 60% of their workforce into their factories. And smaller suppliers are doing the same thing. And so that's creating an issue as well. All of these things are small if looked at individually, but they add up, especially in the current environment.
Gotcha. And I was kind of stealing the stage. Like, what questions do you have for Chi-Tung? You talk to investors, people in the industry every day. What are some of the things you want to know?
Well, I mean, I think the biggest one that's hard for besides obviously the double ordering question is understanding how supply comes on. So what I would be interested in understanding, Chi-Tung, what would motivate you to be more committed to adding supply so that that you're getting the proper return on investment for it?
Well, UMC is the second largest foundry supplier in the world. Of course, we have some kind of distance to our bigger rivalry, but still we are committed to service our customers. When our customers are screaming for capacity shortage, we have to find a solution, especially for the longer term. The outlook for many of them are still looking for strong demand to grow for multiple years. So UMC as a capacity supplier, we are obligated to help our customers. But at the same time, we are listed companies and we have our duty to our shareholders. So how to really strike a balance to come up with a profitable capacity addition to serve our customer is really the key issue. And again, the current environment on the pricing side is gradually coming to a point that we are about to able to start new capacity on a profitable assumption and can also solve the customers' capacity shortage issue. And but it has to be more on a more mutually committed basis. So the whole risk can not only be borne by the manufacturer, it has to be shared by our customers as well. So if there's a more like a risk-sharing business model, we are probably more motivated to bring on new capacity, but it will be on a very cautious basis. It won't be an overwhelming type of accelerating all the new capacity. At least we have to make sure it's going to be a profitable operation.
And it seems like in the interim, you would also, you have obviously have pricing power that you're balancing against that return on investment calculation. So where is it better to raise prices as opposed to work through the commitments? I guess that would be my other question.
Yeah, I mean, well, pricing can be up and downs, but really we want to have a fair share of the profit. And again, the semiconductor nature is always like a boom or bust. And unless we have commitment from our customers for multiple years, it really don't give us too much incentive to build overall capacity to meet all their demands. We have to be a little bit selective in the area we want to engage for the longer term. So when we build a new capacity, we can not only think about the current shortage for a year or two. We really have to think about 5 to 10 years utilization rate, the profitability for our new facility.
Makes sense.
I guess one follow-up on that, and I'll turn it back to Steve for another question, was what type of price increases will people be seeing, especially kind of in the auto space, which I think when we were talking, you mentioned is a little bit a smaller percentage for you guys in total volume, and a little bit maybe even lower margin. But like, what type of price increases do you think we'll see in 2022 versus 2021?
We actually give an indication about the price increase for the whole year during our recent earnings call. We're actually quoting around 10% price increase as a blended average selling price for UMC for year 2021 versus 2020. So 10% is the answer. But certain segment, of course, you are seeing a much higher ratio for that, and certain segments just don't really adjust the price. So it average out about 10%.
Okay. And then for next year, do you expect a shift back to automotive production? It seemed like, if I was understanding right, when COVID hit, you saw a lot of the different OEMs just massively shut down their production lines. You guys probably saw demand coming from, like you said, the PCs and the phones and a lot of those areas. When does that start to get back to normal, or do you see probably 30 to 50% price increases for like an automotive where it's 5 or 10% of your business, because they really have to incentivize you guys to come back almost? It's like, hey guys, you did this to me. You were the ones that left. Now, to make it back or to make that shift happen faster, you've got to get to parity. Is that how you think about it, or am I just missing it?
And not really. I think the short-term pricing is only one of the factor. Of course, we love to see price to continue to increase, but the longevity of demand, the solid, stable demand, and how we can see through the future growth, the future market share on a global basis is actually even more important for us to plan our capacity, which normally will take more than 2 years to come on stream. So we of course, we love to enjoy the short-term price increase, but that's not really the factor we focus on the most. And but having said that, I mean, the price increase certainly help us to be more motivated to consider the new capacity. And they also give us more bargaining power to be more selective, to optimize our product mix and overall enhance our clientele. So I think it's a combination of several factors, and pricing is only short-term one. We don't really want to overemphasize on that.
Good. Back to you, Steve. I know you had one more question. We're almost out of time, but well, did you have anything else before I finish up?
From me?
Yeah.
Yeah, I would say on that subject, one of the things we're talking to our clients about, especially in the last couple of weeks after Dell and Hewlett Packard reported, is sort of peak consumer demand. I don't necessarily look at it as being a peak period for demand for, say, PCs, phones, TVs. But what I would say is that all the inflation you're seeing in the supply chain is making its way to the consumer. For example, we've seen increases in high definition TVs just in the last couple months of like 10 or 20%. And usually these are deflationary products. We've also seen hard disk drive prices go up 6% over the last 2 or 3 months, which doesn't sound like a big number. It's like 1% per week or something like that. But they usually go down 1% per week. And that's on a per gigabyte basis. And that's lower end products too, that are going up in price. So the point of all that is that we are concerned about demand destruction, because there is going to be a point where where you cannot pass through everything to the end user. It's easier to do at enterprises, especially enterprises that need to upgrade infrastructure. But at the consumer level, I think we're going to hit some level of pricing fairly soon, probably, where the consumer sort of backs off a little bit. And then it'll be interesting to see who eats that margin.
Yeah, and so I mean, is the question more to Chi-Tung? You know, are you expecting, or are you guys planning for some type of slowdown in demand next year, given the reopening, given some of these price increases not being able to be passed through, or at this point you're not seeing that and you still think it's just kind of business as usual?
Well, we tend to think of that the current shortage is likely to continue for at least a while. And based upon the request, the order from our customers, and pretty much our 2021 capacity has been fully booked, and 2022 looking pretty solid. And of course, semiconductor, again, these things can change fairly quickly. And demand side is difficult to read. And what Steve just mentioned is likely to happen as well. But we are serving about 10-15% of the market, global market. And I think we are in a position to protect ourselves from a better clientele, from a more resilient client base, if we can manage the pick and choose process well. So I think in summary, we feel rather confident for the demand outlook, at least from UMC's perspective, for the next few months at least.
And there is an incentive to fill the channel right now for the holiday selling season. So the build rates are going to stay very strong through the end of the year. And when I say there's margin pressures that could come up, in other words, the price could get to a point where the retailer knows he can't pass it through to the consumer. He may decide to eat some of those costs, or he may pass it back through the distributor. It may get passed back to the producer of the product, the OEM brand, et cetera. So that can all happen before you actually see the consumer significantly back off. So there's a lot of ways this can play out.
Well, I know as a consumer, I'm feeling it. And one of the things we had talked about prior to was just this inflation, concern. And it's calls like this where, it just makes it so real. It's not just semiconductors. It's, as Steve said, it's everything from aluminum or steel to all these different things. And it's not 1 or 2%. It's 10, 30, 40%. So, something that I know a lot of investors and a lot of the subscribers we have on Ensemble have been pinging us on, how do we keep an eye on inflation? It's also doing, these types of webinars where we get not only, corporate aspect, but, what Steve is hearing, because he's talking to all these different people from industry to probably large hedge funds, pension funds, endowments, things like that. So really appreciate you guys doing this for us. We're going to have our team and Russell, who kind of set this whole thing up, reach back out to you guys. And, there's trade data monitor, there's, demand data sets we can send. There's weather source. When you were talking Texas, like weather source had nailed this for us a while ago. So any way we can help and reciprocate, we will. Gentlemen, thank you for doing this. As always, we appreciate your insights. And this was a great discussion.
Great. Thanks for having me.
Thank you. Thank you for having us.
If you'd like to meet with any of the data providers on this panel, please indicate your interest now. And now, a special data drop from Ensemble provider, the Semiconductor Industry Association.
Hello, my name is Falan Yunug. I'm the Director of Industry Statistics and Economic Policy at the Semiconductor Industry Association. Today, semiconductors or microchips form the cornerstone of our global economy and help enable and power a host of downstream products critical to our modern world, from PCs and smartphones to cars and data centers. Indeed, today's world is built on semiconductors. Therefore, now more than ever, knowledge of the global semiconductor market is extremely important. The World Semiconductor Trade Statistics Program, or WSTS, is the standard for semiconductor market statistics. SIA provides these statistics updated every month as part of our annual semiconductor market sales database subscription, and you can subscribe to get the answers to your critical semiconductor market data needs. Here's why the WSTS semiconductor market data is a must for your market analysis needs. The WSTS data is unique. WSTS is the only source of data collected directly from semiconductor manufacturers. It is the only source of monthly data, the only source of both unique unit sales and revenue data, the only source of forecast information derived directly from semiconductor firms, and the only source of China-specific market data for all product categories. Also, the WSTS data is comprehensive. WSTS subscribers enjoy worldwide and regional sales data on over 200 segment and product-specific levels, as well as biannual forecasts and data on end-use and regional and country markets. Furthermore, the WSTS data is valuable. Subscribers can leverage data in many ways, including the following: to conduct market research, to support investor, customer, and supplier communications, to provide analysis of market share, price trend, regional and country sales, and new product market sizing, and to create market forecasting. In addition, the WSTS data is trusted. The WSTS has a 30-year plus track record of reporting primary source aggregate industry data on a monthly basis. Also, the WSTS data is affordable. WSTS subscription costs a fraction of the price of other secondary source market research. Finally, the WSTS data is easy to use. Access the monthly data anytime from the SIA website using a login and password. Make the WSTS sales data a cornerstone of your semiconductor industry market research toolkit. You can find more WSTS information on Ensemble and can set up a Connect meet with me to discuss any details you wish. Thank you.
If you'd like to schedule a Connect meeting with the Semiconductor Industry Association, please indicate your interest now. Coming up next, advertising trends post-COVID. online spending trends in retail, tech, and political ads. What has been the impact of mediums such as social media outlets, influencer marketing, and memes? Joining our discussion is Tom Porter, Senior Manager of Business Development at IMDb, the world's most popular and authoritative source for movie, TV, and celebrity content, ratings, and reviews. Ed Lavery, Director of Investor Solutions at SimilarWeb, providing global web traffic and mobile app engagement data from over 80 million websites and 50 million apps. Stephen Passwaiter, Vice President and General Manager at Kantar, the world's leading data, insights, and consulting company covering over 90 markets. And now, please welcome your moderator, Claire O'Brien from AWS Data Exchange, providing on-demand cloud computing and alternative data globally.
Hi, I'm Claire O'Brien of the AWS Data Exchange team. Welcome everybody to BattleFin's Virtual Discovery Day and the panel about advertising trends post-COVID. I'm joined here by Stephen Passwaiter of Kantar, Ed Lavery of SimilarWeb, and Tom Porter of IMDb. We'll start off by giving each of our panelists a quick introduction of their data and some of the interesting insights that they have to share. Handing it over to Ed from SimilarWeb to start.
Sure, thank you very much. To give a bit of background about SimilarWeb, let me just share my screen. To give some background on SimilarWeb, we are a provider of web and app traffic data. We have data on 100 million websites and 4 million apps. And the kind of metrics that we're tracking are anything from how many people are visiting to a website, to how long they're spending on a website, their engagement, and how they're getting to their website. Are they coming through paid marketing channels, or organic or branded channels as well? We could even go a bit more granular and actually even tell you the pages people are viewing, the products people are viewing, or even purchasing as well online. And we have this really as a global coverage as well. So it's not just a US data set. We have our data on over 180 countries worldwide. So what I really wanted to kind of talk and discuss a little bit this in this panel were trends on what we're seeing in digital paid advertising as well. So I mentioned one of the metrics, or a couple of the metrics we can actually see are the sources of traffic people are coming to. And one of the ways that we've looked at the industry is by tracking the amount of traffic which is coming through paid search, and also through display advertising. So just for those who are unfamiliar, paid search is essentially traffic on search terms from Google. If you ever noticed the little icon that says ad, that's a paid search term. So we can track the amount of traffic coming to that. What we're seeing on a global level is advertising spend and advertising traffic coming from paid search traffic has been dramatically increasing. We're looking at a 2-year-over-year comparison period, just because, as many of you are familiar, obviously last year is not the best year to compare performance trends. But on a global level, paid search traffic is up 62% year-over-year, which really implies that brands are heavily investing in going online and marketing online. Display ad traffic. So display ad traffic is recognize the banner adverts you see when you go into any website, these sometimes annoying ads that track you around. Actually, traffic to those coming from those sources is actually very, very flat. So what we see online is advertising spend is shifting to paid search, but not on display ads. Just to provide a little bit more context on what we're seeing in other industries as well. In the US, the rate of growth of paid search is slightly lower. It's only about 14% year-over-year. The reason why it's a slightly lower growth is because it's starting off a much higher base. Whereas globally, we're actually definitely seeing more shifts online and international markets on paid search. Categories like e-commerce have actually been accelerating the most as a sector in the US. So that's been growing 25% year-over-year on paid search. Haven't shown that here, but I guess just one of the other insights I do want to kind of show you is how paid traffic marketing spend is actually distributed across key different brands in the US. And just to kind of give a bit of perspective, I just used Amazon, Walmart, and Booking and Wayfair as an example. And I guess one of the things that's been very interesting by looking at Amazon and Walmart, the amount of traffic or the share of traffic coming from paid channels for Amazon and Walmart has actually been declining over the past 2 years. Overall traffic has been increasing, so the absolute number volume is up, but actually the share of traffic coming from paid is declining. Whereas if you look at a company like Wayfair, which is in the home and garden category, they have been rapidly increasing their share of paid traffic over the 2-year period. It's actually 24% of their traffic has come from paid traffic sources. Now, I think one of the things this actually says about what's going on in the market is that many of these categories that have just seen incredible growth over the past year as a result of the pandemic are actually driving a lot of that growth through advertising spend. So they're really capitalizing on these consumer trends and really heavily investing in it. Whereas brands like Amazon and Walmart, which were performing very, very well, even pre the pandemic, haven't needed to invest so much in it. So what I think, just as a note to round all these insights off as just a general takeaway, the general trends that we are seeing is that in the US overall, but definitely a shift to paid advertising trends, paid advertising traffic, but actually it's very much being driven by those categories which are benefiting from the pandemic and the changes of consumer behaviors like home and garden.
Great, thanks so much, Ed. I'm going to hand it over to Steve now, who's going to tell us about some of the trends in the political category.
Yeah, thanks a bunch, Claire. Well, good day, everyone. And yeah, we get to talk about political advertising now. Talk about a relatively irritating form of advertising that tracks you around everywhere, right? There's more than one form of that out there. But when we look at political advertising, particularly coming off the presidential year, what we saw was an incredible record amount of spending that really distributed itself across about every ad platform there was. There was a great story to be told in digital, particularly with the growth in over the top. Over the top has really found a place now that it's achieved some scale amongst the political advertising class. But at the same time, good old linear television, both broadcast and cable, had record years. There was over $6 billion spent in linear television last year by political advertisers. And in all kinds of places where you would have never expected the amount of spending to be what it was, over $200 million in the state of North Carolina for a Senate race, about over $150 million in small states like Maine and Montana, where there were really competitive Senate races. In California, there was over $300 million worth of advertising dedicated just to ballot measures. And that doesn't mention, the tremendous amounts of personal fortune that Michael Bloomberg decided to shower on media companies during the early part of 2020. And really, what does this mean going forward? As we look at the political landscape for the midterms, which will be here before we know it, we have an incredibly competitive situation in both the House and Senate. The House is within a few seats. The Senate is right down the middle at 50-50, with the vice president having come in and throw tying votes. It certainly does set up for yet another incredibly busy, loud, noisy year of political advertising. The stakes are incredibly high, and I believe you can look forward to both parties throwing everything and the kitchen sink at the American voter to try to convince them to crank the lever one way or the other. One thing we know for sure, it's not going to be dull or boring. It can't be, because politics is probably the most interesting hand-to-hand combat sport known to mankind. And we are certainly going to see an awful lot of that on screens everywhere around you in the next 18 months.
Great, thank you so much for that, Steve. And finally, over to Tom to talk about IMDb's data.
Thank you, Claire. Just going to share some slides. Okay, so yeah, I'll just give you a brief overview of IMDb's content and data licensing business. I'll talk about some trends as everyone else has been doing. And I just also want to just take a minute to tie back what I'm talking about to some investor-specific use cases. So everyone is aware and may use and may love IMDb.com and IMDb's apps. If you're into the entertainment industry, you may also be a subscriber to IMDb Pro, or you may use Box Office Mojo. What you might not know about is IMDb's commercial content licensing business. So this is where we take subsets of the data that you can see on Pro and on IMDb and on Mojo, and we license them via AWS Data Exchange. And we're across industries, mostly across media and entertainment, but also market research, travel and hospitality, and financial services. And what we're doing is we're really powering decisions. So that could be ad spend, it could be what to watch recommendations, it could be content and IP valuation, acquisition strategy, programming, marketing strategy. It's a hugely competitive space, and IMDb's data can really provide a differentiator, a kind of alternative view to help make those decisions. And of course, we're powering informed investment decisions, as mentioned, and I'll come back to that in a second. So some of the trends, I just wanted to highlight that we're seeing them in our data, but we're also just monitoring them from a kind of interested view. I've said refining the OTT boom and the content explosion. The OTT boom was already happening way before COVID, but COVID really accelerated that, and we're really seeing those kind of OTT services that rushed to market, they're kind of taking a step back, and they're really refining the service that they're offering via the recommendations piece that I talked about, trying to keep the customers as subscribers, keep them on platform, or they're really refining the strategies around content valuation and around acquisition, especially on a global level. The creation and the acquisition of locally relevant content is very competitive landscape, for example, to win in India. So really interesting to see how that unfolds. Second, the theatrical comeback. As you can see in the graph here on the bottom right, we've got a way to go before we can get anywhere near where we were pre-COVID, but the last few weekends have been promising and have kind of helped shed a light on what has been a long and dark tunnel for COVID. And number three, this direct-to-consumer theatrical hybrid release model. I mean, even if all the theaters do reopen, and if the general public decide that it's safe to go back inside a theater, there's a lot of question marks and controversy around how the studios are going to be releasing their content. They're experimenting with things like hybrid, releasing in streaming and in theatrical at the same time. There's a lot to kind of unfold, and I think it's an interesting space to watch particularly as we continue to recover after COVID. And I just want to tie it back then. So, you can see it's very easy to tie back what I'm talking about. We're only really a couple of steps removed from tickers. So you saw the graph on the last page. This is the same data, it's just filtered by distributor. And you can see there, the 2021 domestic box office to date. You're seeing Warner Brothers doing well there. That's linked to AT&T for a little while longer, at least, until that merger with Discovery happens and everything changes. They've really been buoyed by The Conjuring recently, which is a big release, helping the box office to recover. The same, you can see Viacom CBS in there, which links back to Paramount. They've really been buoyed by Quiet Place Part 2. Top 21 TV shows by IMDb rating. You can cut the data up in many different ways. looking at this really provides an interesting kind of insight into fan popularity, what people are voting on via IMDb. And again, 1 or 2 steps removed from tickers. So you can see Amazon's Panic in there, several Netflix shows, including Shadow and Bone, HBO Max, The Nevers. You've got Loki from Disney Plus, and the Mosquito Coast from Apple Plus coming in as well. And you can, this is one example. There are already many ways to cut the data up, including by talent. You're looking at some of these deals, first look deals and exclusive deals that are happening with the writers and showrunners. And this will really give you a view of, which of the tickers are going to do well in the race to dominate globally. Obviously, get in touch if I haven't covered anything you're interested in, but I'll be sticking around for the panel a bit longer.
Awesome. Thanks so much, Tom. Wanted to come back to you, Ed, and just dig in a little more. You shared with us some top-level trends around digital advertising. I wanted to know if you could dig into either the ones you mentioned or some additional general trends you're seeing in paid advertising traffic.
Sure. Yeah, so the other company I really want to kind of dig in, because I think this is actually one of the more interesting emerging trends. I wouldn't say it's that emerging, but I think it's definitely becoming much more prominent. And that's the role of Amazon in digital advertising. So just to give us a perspective, 50% of product searches are done on Amazon, on the website on Amazon, not on Google. This is for product purchases. And what Amazon are beginning to start doing is capitalizing on their own paid search, on-site paid search revenue stream, which is growing dramatically right at the moment. We launched a new product called Shopper Intelligence a few months ago as well. And in this product, we're actually able to track all the volume of searches that are done on-site on Amazon. And we're able to split that out between paid and organic searches as well. We can also go into more detail about showing you what products are being bought and sold, but I'm not going to go into that for this panel. But just as we're focusing on advertising trends, one of the things that we've seen just when we're looking at Amazon overall is that 12% of searches today on Amazon.com are paid searches. That's up from about 8% 2 years ago as well. So that growth that Amazon is capitalizing not only on the volume of visits coming on the website and searches, but they're actually now taking a bigger share of revenue just from those searches. And what I also wanted to do was kind of double down on one brand in particular, which is investing heavily on Amazon paid search, and that's Amazon. So Apple, sorry. So Apple, 15% of their on-site searches they pay for on Apple. And that's up from about 3-4% 2 years ago. So it's a dramatic growth. And when you actually look at apple.com, I didn't have enough space in the slide for this, but the website apple.com, when you look at the share of traffic going to that website from paid search, that has been flat over the same period. So Apple are actually beginning to start shifting the advertising spend away from Google and on to Amazon, which is where people are buying most of their consumer products these days as well. So I think just focusing on the longer term trends of these brands, I think they're going to start moving away their spend from Google from a product perspective and more into Amazon. And that's going to become just an ever increasing revenue stream for the business.
Great, thanks so much for digging a little bit deeper into that, Ed. I also wanted to follow up with you, Steve. Curious, from kind of the overview snapshot of the political ad spending space today, from an investor's point of view, what are some key data points that investors should be considering and looking at related to political ad spending?
Yeah, sure. I think, the organizing philosophy for political advertising in the last several years has been, a rising tide lifts all boats, which it has. So everybody that sells political advertising has seen a windfall from the increased fundraising simply because right now the political parties have the spigots open, wide open for for donors at every level. Whether you're donating $20 or $20 million, the ways to do that are pretty clear and wide open at the moment. But I think overall, Claire, there is a generational change that is about just sort of starting to work its way into the political space. And I think we started to see the first embers of that fire show up last year with the incredible amount of growth we saw in over-the-top and the use of over-the-top television. There's a few things going on behind that. One, kind of from a media perspective, is that the reach that is afforded advertisers by linear television continues to decline. So over-the-top television is really a great place to go in order to make up for that loss of reach on the linear side. But moreover than that, there's a generational change too, because not only is over-the-top a place to get more reach, it's also a place to get a new audience. And we're now at that kind of point in time where the top end of the millennial generation has now hit 40. And where politics is concerned, that's a pretty important age. And I think by the time you're 40, you've got the full adult going on, between the 2.2 kids and the vans and, the college funds and all the fun stuff that goes along with adulthood. It tends to be an age where your interest in getting involved in the political process tends to go and grow. So I think as we move through time here, we're going to start to see kind of at some point, there's going to be a little bit of a tipping point between those two very popular forms of video in there. Now, of course, a lot of people that have stake in one have stake in the other, which is kind of a smart thing to do. But, I don't think there's any doubt about what comes down the pike from here.
Steve, pretty fascinating. Really interesting to hear the short-term trends we've seen over the past years and how those are kind of going to extend to much longer-term trends. Following up with you, Tom, curious, can you talk about some of the decisions that IMDb data buyers are using your data to power? And how could investors think about tying the data back to decisions that they can make?
Yeah, so I gave a couple in the presentation. I think just to go a bit deeper on those, it's really about if the investors know that this is the same data that the studios are using, and this it's really competitive space. So the studios, they're investing a ton in ML and these other models that will tell them that how well a piece of content will perform, or and this is. You see, so competitive in the space to acquire this library content as well. So, and there's two tracks really. It's new content development, and it's acquiring that IP. You just saw, the Amazon MGM news, and there will no doubt be more. I think that these big mergers in the space as the tech companies look to buy up more existing IP. But I think having that same data and knowing kind of what the industry is using to make their decisions is a great differentiator for the financial services. And every nice thing is in our data, everything is tied back to companies. So, and once you get to a company, you're a few steps away from a ticket, from an investment decision. So our data is structured in that way. So whether you're at the title level or the talent level or the franchise level, we can tie it back to companies and those and take our trends, take other trends that you're using, tie them together. Because the other thing that IMDb offers is this kind of it's the source of truth for global movies and TV. So if you need a source for everything, which you probably do, then IMDb is that source of truth. And then once you have that, you can use our data as the kind of your canonical reference, and then you can tie in other sources of data to that as well. So it's about knowing what the studios know and trying to stay a step ahead.
Great, thanks. Thanks for kind of painting that picture, Tom. That's really interesting to hear. So as we start to wrap up this panel, I just wanted to give each of our panelists a minute or two to kind of share any final thoughts with the audience. So any last insights or trends that you want to highlight. Over to you, Ed.
Sure. So I guess just to summarize from the SimilarWeb perspective of digital data, the world is moving online, consumers are moving online, businesses are moving online, so is advertising spend moving online as well. And the general shift just to where companies want to spend their marketing budget is just naturally going to evolve to be online as well. And definitely one of the biggest growth areas is search digital marketing as well. And that's happening on both Google and Amazon. I think one of the interesting trends I think we're going to start watching for is these up and coming brands as well, these categories which have just exploded over the past year or so, their investment in paid advertising online, and whether that investment matures as these businesses grow, or can they actually grow without this advertising budget as well. And I think that's going to be one of the things in the medium to longer term to see how sustainable a lot of this growth also is as well.
Great, thanks so much, Ed. Any final thoughts from you, Steve?
Yeah, a couple things. As we get ready for the midterms, it's going to be really interesting to see what Facebook and Google decide to do with political advertising. Both parties, both companies decided to kind of call a halt during the last election cycle, and I believe Google is going to restrict what certain classes of advertisers, including political advertisers, can do on YouTube, which has always been considered a must-have for political advertisers. I also believe that the growth in digital trends in political advertising, much as they're doing in the commercial sector, that is a process that is underway and is not going to stop. That's going to keep going. And I also think as we look at next year, one kind of interesting thing that happened in 2020 was a much more spirited battle for minority voters, particularly where the African American and the Hispanic voter are concerned. There was a pitched battle last year in places where we hadn't seen that before. And my guess would be that that's not going to stop with 2020. I think we're going to see a pretty fairly expensive battle going on in minority media platforms in this coming space. I think that's something we can look forward to and watch happen.
Really interesting. Thanks, Steve. And yeah, Tom, any parting thoughts from you?
I think just to summarize, really, I think COVID really accelerated a lot of trends in terms of viewing behavior, and the direct-to-consumer model is not going anywhere, and that's only going to get more and more kind of abundant. And I think I can't predict the future, but that kind of hybrid model I talked about earlier, where if a studio can figure out how to do theatrical, how do we keep that business alive, and also have the direct-to-consumer data that they want and why they're going after it, then those are potentially the services that are going to win in the end. I mean, the battle at the moment, there must be 7, 8 kind of big players in the OTT space. Will they all survive? I'm not sure. I think we'll see more diversification. We're seeing more bundling with, sports packages. So I think there's some things to watch as elements of live television. Maybe, they won't go back in the traditional linear TV sense, as we maybe know them well for, but those, we've seen all the money being spent on those rights. So I think if the OTT services are looking at this, they're looking at the original IP, they're looking at how to bundle different kind of TV offerings into one. It's just going to be a really interesting space to watch to find out who comes out on top.
Awesome. Well, thank you, Ed, Steve, and Tom, for joining us today for our virtual Discovery Day. To everyone watching, SimilarWeb, Kantar, IMDb data, you can find all of this data through AWS Data Exchange and as well as through the BattleFin Ensemble platform. So thank you to our panelists for joining us and to our audience too.
If you'd like to meet with any of the data providers on this panel, please indicate your interest now. And now, a special data drop from Ensemble providers M-Science and Peaked.
Hi, I'm Spencer Marshall, Senior Analyst at M-Science, and I'm joined by Moritz Thoma, Chief Executive Officer and founder of Peak.ai. We're here to talk about the partnership between Peak.ai and M-Science and how it can be deployed in your investment research process.
Hi, I'm Moritz, the CEO and founder of Peak. Peak provides the most reliable signals about e-commerce. We are able to provide these signals by virtue of having created the largest network of online merchants globally who share their analytics, sales, and marketing data with us. In return, they get to access superior marketing and analytics software by Peak. That's Peak's business model. We create valuable software for online merchants who give us access to their sales data. We then aggregate the sales data from insights about e-commerce, which we make available to corporates and investors. So suppose you're a retailer in the UK grocery space and you'd like to understand how your teams are performing vis-a-vis your competitors. So obviously you understand your own basket values, you understand how much money people are spending on your website. What you don't have access to is your competitors' data. What you're seeing here is a combined data of 200,000 retailers in Peak's network, where this UK retailer can benchmark himself. So you'd like to understand sort of where sales come from, what the average conversion rates are, and how his teams are performing compared to the competition. You can then dive into sort of understanding where transactions come from, whether his display team, his direct team is performing well, and use it both for operational and strategic purposes. Retailers connect their data, they can connect their analytics data, their ad data, and get these benchmarks for free. And in return, Peak is allowed to use and aggregate their data and make it available to financial investors. For example, this is now one of our POS data sets for the online space, where we see each product that was sold on the retailer, including the timestamp, city that the shopper was located in, the category of the retailer, and basket ID, which ties together the entire purchase. In this case, about 45 items was purchased on said UK retailer. This is sort of how Peak works, and I'll hand over to Spencer, who can show you how the data is being leveraged for financial investors.
Thank you, Moritz. So, since the website analytics data that Peak ingests from its 500,000 plus merchant base is so rich and wide, the Peak data can be sliced into point of sales data or web traffic data or ad spend data. And depending on how you slice it, it can be useful for tracking companies like Shopify, where we can see international GMV trends of hundreds of thousands of merchants using the Shopify platform. Or Pinterest, where we can see total referral traffic to websites that come out of Pinterest. Or Google, since Peak can break out Google ad spend quite granularly from its web analytics data. We produce this dashboard using entirely Peak data on Google ad spend. We can see Google advertising spend by channel, by geography, and by device type. We can see both pricing and volume data. And this data correlates quite tightly to Google reported results. At M-Science, we were able to use this data to successfully forecast the decline in Google ad spending at the onset of the pandemic and the subsequent reacceleration later in 2020. As a reminder, peak data for the investment industry is available exclusively through M-Science, so don't hesitate to reach out if you're interested in the data for Google or for any other application.
So Spencer, can you maybe tell me how investors are mostly using the peak data?
So peak data is different from many of the other sources of alternative data that we use at M-Science in that there are many different data types embedded in peak.ai. So for looking at e-commerce enablement platforms like BigCommerce or Magento or Shopify, the point of sale transaction data is very useful. But then for looking at a company like Google, the ad spend data is really what we're after in order to be able to forecast the performance of Google's advertising business.
If you'd like to schedule a Connect meeting with either M-Science or Peaked, please indicate your interest now. Coming up next, Data Dashboard Review. Are there differences between employment data sets? How should you be finding signals in the TMT space? Led by CEO and co-founder of BattleFin, Tim Harrington, featuring data from DataPulse, Skyscanner, WeatherSource, and Vertical Knowledge.
Hi, everyone. Thanks for joining, as always. We're really excited at BattleFin to be rolling out some new initiatives. One of those big themes for this year is data visualization. So we've seen a lot of uptake in the alternative data market, initially with the quant and very systematic world. And over the last couple of years, we've even seen some of the larger funds get into data from more the fundamental and discretionary type of strategies. We think that a big leg of growth is going to be really getting the analysts and the portfolio managers more involved in the whole data process, and the way to do that is actually through data visualization. We work a lot with data engineers that love Ensemble and the aspects of Ensemble that allow them to really drill into the data sets, get access to the historical data immediately, getting data in minutes instead of months. And we've even seen it from the back office side, what we've been able to do, automating the compliance and even the contractual side. But a big part of this is how do we get data that has actionable insights into the hands of analysts and portfolio managers. But in order to do that, we first have to build the dashboards. And the model that we're using is we're working with a number of the alternative data providers that really are interested in helping to get them to visualize their own data. And given our backgrounds at BattleFin, a lot of us came from larger hedge funds or CTAs, futures trading firms. So we approach it from how do we get actionable insights out of these different dashboards, and how can we showcase trends that are happening? So the ability to look at something and drill down and really try to understand that is really important. So we'll take you through a couple of those dashboards that we've built today. We'll do some data use cases, and we'll even wrap up with one that we just put together. Thank you to Ben and Nitsan and the team, and Ish and Russell for working on this. This is what Ensemble is really all about, which is this idea of how can you create a combined dashboard with multiple data sets looking at multiple areas of what might be going on specifically within a sector, within a different category, and really trying to drill down and understand how can you look at these different KPIs. So one of the things that we've been doing is also trying to develop a product where a lot of these different data providers can really use this as a sales tool. So what we envision is a data provider getting access to these dashboards that we've co-built with them, and the ability for their sales teams to be able to go out and show, whether it's discretionary fundamental funds, whether it's corporate clients, really just show them the power of what their data set has. So let's take a look. It's always better just to dive right in. For those of you unfamiliar, this is Ensemble. Hopefully most of you have seen it. I've clicked on our dashboard tag on the left. And what I've done is kind of said, okay, let's look at, the data pulse data set. You can go in and click on the view dashboard. That will give you a view of what we've been doing. This looked at, company guidance. So what an analyst would typically look at. We then pulled the IBIS estimate for revenue, looked at what the company reported last, and then the BattleFin data team has built a model. And once again, this is just something internally for visual purposes. There aren't that many quarters that Zoom's been public. So, the amount of training history is not that long, but I think it does a good job of showing you what we were looking at was really, customer growth. We were looking at, new business from an enterprise level. I thought that was one of the really cool things of the data pulse data and what the level of granularity they're able to give. And then one thing that we're building out is kind of a churn aspect. So is Zoom losing clients now that we're coming out of the pandemic? Is Zoom losing clients given that, people are going back to work and maybe not using Zoom as much? Or has it become so ingrained in their lives that they're going to keep using it? And another additional thing that we can look at is they have a new phone product. So how can we look at that? And we're talking to Data Pulse currently about ways to track some of the new products that might be coming out from Zoom. So that's the first example. Next, we'll move into Skyscanner, which is another popular topic. Travel, is it coming back? You can go down and it's easy as clicking the view dashboard. Got it open here. You can look at the number of searches. So that's just going in who's searching and going where. Redirects are closer to more of the purchase side of things. So who's actually getting ready to fly. Some of the changes in revenues and percent growth. You can look at everything from quarterly searches, how far out are people searching, and then really even what we think is kind of cool is looking at, what are the purchases? Is it business? Is it first class? Is it economy? Where are people searching from, as well as where are they going? So I think that's kind of important. And what we love too is this, the drill down ability to say, okay, if here's British Air, let's take a look specifically at that airline. And once again, all of these different widgets update based on the category or, even in this case, the company that you're looking at. Another topical one, Vertical Knowledge has an Amazon bestsellers data set. So, as we looked at it, we wanted to kind of see, total number of brands and products listed, which are the top product categories, which regions are doing the best and which are kind of broken out. We built our own index. You could do anything you'd like. This just kind of looked at, measured by the weeks at the top of the best-selling charts on different categories. And once again, the ability to drill down into all of these health, home, garden, industrials. And one of the things that I kind of looked at was, which brands have been rising over the last 90 days and which brands have been falling over the last 90 days. So that kind of could give you some insights. We had a good call with the Vertical Knowledge team, and an example I think they had used was, GoPro had a new camera offering, and for the first 2 weeks it was pretty high up in the Amazon rankings. And then on the third week, it fell 50%. And then the fourth week continued to fall. So, that's a great sign to see which products are getting traction and which are losing traction, and, relating that back to what the stock prices will do is obviously the goal. So we think a pretty cool data set. And then the next one, which we've just kind of completed, and this is kind of where we're going and what we're thinking about is you may want to take a look at a specific company, and there might be multiple data sets that you'd like to include. So we took kind of just a grouping of different data sets, and at the top just gave little almost speedometer type of ratings of red or green. So, link up, we looked at job listings and open jobs and where they have been over the last 3 months. We looked at the Amazon bestsellers index and how that related to Nike. Financial news sentiment from stock snips, executive transactions from 2IQ, board announcements from BoardX, and then ACT Analytics for an ESG score. So, this is something that is totally programmable to what the end buyer wants to look at. But what we think is kind of cool is, you can really put everything into one spot and have a chance to summarize, or you can drill down as much as possible. So, on the brand strength side of things, like what's been happening at Nike, so 2019 saw these large spikes. Where are we at now? Is it trending down? What's happening? Why is that? And I think these are also great because you can actually use these when talking to the companies. If you're an analyst, it's much better to come in armed with a lot of data. Like one thing I noticed, the job listings, obviously this is COVID time, but they were pretty active in the job listing markets. And with LinkUp, they're just pulling job listings that are on the company websites. But then all of a sudden, in kind of May and June, you've really seen this falling off. So did they do a lot of hiring, or what kind of caused that? So I think always great to walk into some of those company meetings or company Zooms, I guess nowadays, to figure out that information. We looked at insider transactions for Nike. Obviously these insider sales, back in, and what is that? Probably closer to September, trying to understand that. You'd obviously like to see a lot of company buying or insider buying. So haven't seen that, but something to keep an eye on. And then, even on the stock snips financial news sentiment side, like having a sentiment indicator nowadays is almost key. It's another factor that's probably part of your investment process. So scrolling down, you can see the BoardX, the board announcements, just to kind of go through and then be able to drill down and understand what's happening. We can even look at board age distribution or changes in that. And then last, you can even look at kind of an ESG score. So we used ACT Analytics. We have a couple others, RepRisk, and some others that have great ESG data, Refinitiv, and the Market Psych product is pretty cool too. I'd recommend taking a look at that. But this was just kind of looking at, the different ESG averages, where they are, being able to drill down into some of the different categories here and see how that translates. But, once again, this is totally programmable. It's really, the goal that we love is first we work with the data providers to really surface up the insights that we think are in their data. They can turn them into dashboards, exploration kits. What we love is we call these kind of modern day white papers. So instead of handing someone a 20-page thing that they have to read, the ability to take them through visually is just something so much more stimulating, so much higher success rate for selling your data. And then as we move to the buy side, we're really excited, and we're rolling out a couple betas with different buy side firms. So if you're kind of new to alternative data, and you don't want to be thrown into the middle and say, hey, okay, that's great that you have 2,000 data sets. Where do I start? What's good? What's bad? I think that's something that we really want to help with, and that's why we created Data Hunter. So being able to come in here and really just get a curated or very concierge type service is something that we're excited, and we think that that people will use. So with that, I'd love to have anyone reach out to us at BattleFin. It's almost data science as a service, and we're really just looking for the questions, the investment themes, and the different things that you guys want us to help you solve with data. And with that, I'll wrap up the presentation. And if you'd like to meet with us, please email us at info@battlefin.com, or we'll put up on the screen. We talked about Data Pulse and some of their Zoom, different dashboards we built. vertical knowledge. They have a number of data sets as well, but we can also do the Amazon bestsellers and Skyscanner. If you're taking a look at the travel market, that's a must-have, and I'd highly recommend it. And if you're interested in trying to build out some type of combined dashboard, we'd be happy to take a look at that as well. So thanks for the time, and we hope to hear from you.
If you'd like to meet with any of the data providers on this panel, please indicate your interest now. And now, a special data drop from ensemble provider Revelio Labs.
Hey, I'm Ben Zweig, CEO of Revelio Labs. Really excited to be here with BattleFin doing this data drop. So a little bit about Revelio Labs. We are a workforce intelligence company. So basically what that means is we are essentially constructing a universal HR database, seeing if we can essentially reconstruct the HR database for every company all at once in a way that can show, where you can draw simple comparisons between what's going on in one company and what's going on in another. So there are 4 families of sources. So the first is online professional profiles. Think like LinkedIn profiles, things like that. And there you can see someone's positions, their start dates, end dates, how many people are in a company, where they go when they leave, et cetera. The second is job listings. It's a great indicator for future hires. It's a forward-looking indicator. We also get salaries from those. The third is government filing. So that could be labor certification applications, that could be layoff disclosures, anything and everything that touches employment. And the fourth is firmographic data, and that really brings everything together. Data from Dun & Bradstreet that really helps us map companies to actual entities and industries, and fills in all sorts of information about identifiers that are point in time. So on my screen, you can see this is our dashboard. So you can see a set of companies. You can select any set of companies, even an entire industry. Of course, we can see all this information over time. So, so we cover about 8,000 public equities, many more private companies, and we see all this information going back to 2008. So if we check this out over time, we'll see the same information, but a bunch of line charts. So we can see how these things are trending. And we can also see job postings. So here we can see volumes of job postings at Pfizer. This can also be any company. So we can see the number of active postings, the new postings, and the removed postings. So we can see the stock and the flows. We can also see where people are coming from and going. I'll just go straight to transitions. So if we take Snowflake, for example, we can see they recruit a lot from ServiceNow, Oracle, Salesforce. If we want to see where they're going mostly to Amazon, Microsoft, and Alphabet. Different set of companies. This is really important if you want to track the war for talent. We're working on a few more things. We've got a screener. We've also got a way to analyze jobs. So we can analyze the composition of jobs by activities. So we can see, is a data scientist at Microsoft different than a data scientist at IBM? So we can select any role and see, how those tasks are decomposed. So there's quite a lot of advanced science behind this. But really, at the end of the day, our goal is to create something that is simple, easy to use, and can get really, really deep insights into the inner workings of any company. The use cases are really varied. Basically, anything a company does somehow manifests itself through their workforce. One major one is tracking the attrition of salespeople. We've tracked a lot of onshoring and offshoring. So to see if a company's changing their strategy. And if companies are competing in a certain space with a handful of competitors, we can, for a very strategic role or skill, we can track that war for talent. We can track that race in real time. Another thing I want to mention is salaries. Since we do track salaries for all positions, we can sum those up and get a very good predictor of operational expenses. Our clients are very varied. We work with a lot of hedge funds, private equity firms, sell-side research organizations, and also consulting firms. That's a big client segment for us. We also work quite a lot with corporates themselves in enterprise, and a lot of different groups are interested in these types of analytics. So it's not just people analytics, it's also corporate strategy, market intelligence, talent acquisition. there's really quite a lot of ways that this intelligence can be used. You can find us on BattleFin's Ensemble platform, and if you believe like we do that workforce analytics can get you really deep insights into what's going on in companies, please reach out. And really excited to be doing this with BattleFin.
If you'd like to schedule a Connect meeting with Revelio Labs, please indicate your interest now. Coming up next, enterprise cloud adoption. How Datapulse can help you understand it and place smart bets on stocks like VeriSign, GoDaddy, Zoom, and more. Joining us for the discussion is Jeff Schmidt, CEO of Datapulse, providing accurate visibility into revenue streams and enterprise user information into select stocks. And now, please welcome your moderator, CEO and co-founder of BattleFin, Tim Harrington.
Well, welcome back, everyone. We're excited to jump into another topic that we've seen just have a huge effect, which is obviously cloud adoption. One of the things we constantly hear from investors is, how do we understand the topic? What do we do? Who's taking market share? So wanted to welcome Jeff from Datapulse. Welcome, Jeff. Let's jump right into it and give us a little bit of background on Datapulse and where you guys derive your data.
Sure. So thanks, Tim. Thanks for having me, and good day, everybody. So Datapulse has been around for 5 years, and we look at internet infrastructure data to determine things like customer numbers, revenue sources, subscription levels for a number of companies that are in this space, the enterprise cloud space. And our metrics track very closely to what these companies announce about their customer metrics, their total revenue numbers, et cetera. So the Datapulse data is a great way to track this very important overall macro trend, as you said, Tim, of enterprise cloud adoption.
Yeah, and I mean, I think a lot of the audience probably knows, but it's better to be thorough. When you think about enterprise cloud adoption, what is it? Why is it important? How do you guys play into this?
Sure. So it's important to kind of decompose the macro trend of enterprise cloud adoption a little bit. Quite simply, it's using other people's computers, getting out of the heavyweight business of running data centers and email servers and things like that, and using contracted services instead of these kind of very operationally and cost burdensome things. But there's other pieces to it that are equally important. Things like more businesses are moving online. Particularly with the pandemic, we saw small and medium businesses that had traditionally not operated online, or did so in a small way, move to using an online presence to increase their revenue when things were shut down. And so there's all kinds of other folks that are participating in this ecosystem, from storefronts to payment providers to other utility services that really contribute to this overall cloud adoption and movement online that we're seeing at scale here.
Yeah, I mean, I credit the whole cloud movement with us even being able to launch Ensemble, like the thought of having a server room with IT guys managing it, to go out and have to spend $1, $2, or $3 million doing that when there's a solution. It helped us, so I definitely get it. But I guess we dig into the pandemic, and what have you guys seen on that side of it, and what impact has the pandemic had on enterprise cloud adoption?
Sure. So people that are in favor of cloud adoption or pushing cloud adoption, talk about the greater speed, greater capital and labor efficiency, scalability, security, all of those benefits of using cloud resources. And in fact, many of those traits were exactly what we needed during the pandemic. The flexibility to have staff working from remote locations, the flexibility to be able to, scale up and scale down and move workloads in ways that nobody ever anticipated. You just don't have that sort of flexibility and scalability when you own a data center full of iron, like we used to back in the old days. And so many people will say things like the greatest push to speed up enterprise cloud adoption has been the COVID pandemic, because it really has in a number of ways helped businesses deal with this issue.
Yeah, and I guess let's dive into a couple of companies, or what are the companies that were most impacted by cloud adoption trend, and which are the ones that you guys kind of monitor and can give insights into kind of our audience here?
Yep, absolutely. So, obviously the mega providers, like Amazon and Microsoft, are taking a big piece of this as people move their workloads to those environments. And Data Pulse chooses to focus on some of the more interesting and smaller providers that are benefiting from these. We'll talk about a couple of here today. VeriSign and GoDaddy. These are companies that benefit as firms move online, they sell online, they invest in a presence online, they buy services that enable them to operate online. Zoom, which is a data set that Data Pulse has had for almost 2 years now, became very popular, obviously after the pandemic. But that Zoom is a trait of this broader flexibility that we're seeing in work from anywhere, or working in an office a couple of days a week and at home another couple of days a week. And then we do track a specific piece of the Microsoft portfolio, Office 365, directly, and that's a good overall metric of where we are in this overall migration to the cloud. Are we in the third inning or the eighth inning, as you say? And as an example, in April, there were 8.2 million Office 365 customers, but it's growing at quite a clip. It's growing at 1 or 2% month over month, which is really an amazing number when you think about it. And that shows this, overall, macro trend.
Yeah, and I guess if we could, maybe we could drill down on one of them, like even an example of Zoom. And I know we have a dashboard we can show at the end that we've been working with you guys on, but like, so in the case of Zoom, what are you guys doing? How are you, and like, what are some of the key metrics you look at? Like, how are you deriving that data? I guess it would be a question the audience would want to know.
Yeah, so for all the companies that I just mentioned, we track KPIs that management announces every quarter. And so in the case of all of these companies, total revenue, obviously, many enterprise cloud companies announce a number like clients with a value of over $100,000 on an annual basis. Zoom has an additional number that they announce, clients with more than 10 employees. VeriSign and GoDaddy talk about a metric that's called domains under management, that is a key driver for both of those companies. And so Data Pulse measures these numbers directly with very, very high fidelity, and then constructs models and indexes that track the KPIs that these companies announce quarter over quarter. And we found really incredible results with Zoom. We've been within a couple of % of total revenue every quarter, and with VeriSign, we're plus or minus 3% of their quarterly actuals. Our model with our VeriSign index has an R squared of over 0.93. With GoDaddy, we have an index that correlates to the stock value that's in excess of 0.9. So we have very nice models that track these companies and the metrics that they announce very well.
Yeah, I think as a recovering buy-side analyst and PM, I always kind of say, like, I wish I had access to some of this data, like back in the 2000s and 2010 up until 2012 when we started BattleFin. But just for the audience, what Jeff was kind of going over, these are inside of Ensemble. These are the data sets that are available. One that we've looked at and worked on has been the Zoom data. And I think we've been just really impressed with, building out a dashboard together where we could kind of look at a lot of the data in a visual way, and being able to kind of, think about it from the analyst standpoint that says, okay, what's the company revenue guidance? What's IBIS estimates, build a model behind the scenes, and then kind of wait to see what the earnings will come out with. And, we've been impressed by, the data pulse data. And, look, you're not going to get it right every time, but if you have, the KPIs that really are going to give analysts an edge here, that's really where we think you want to be focused on. So, the ability to see month over month new customer growth, total customers, even looking down at, customers greater than 100,000, as Jeff was saying, it really adds an advantage that I think a lot of analysts are going to want and need. So, we'd encourage you to log into Ensemble, select a meeting with Data Pulse and Jeff and the whole team and Michael, because we really see it's not just Zoom, it's a lot of these other cloud adoption players. And, I guess I'll finish with that, and a question for you, Jeff, like, where are we? Are we in the third inning, the fifth inning, the ninth inning and cloud adoption, or where do you think we are?
Yeah, so I think we're in the fourth to the fifth inning. There's a lot of movement that will continue. I think that the pandemic allowed businesses to see the value of using the cloud model, and it has accelerated some of the curmudgeons that may have resisted moving to infrastructure that they don't own, and so we're still. We're not in the early innings, but we're still in the game of this kind of seismic shift. I think It's a very exciting time to be in IT.
Yeah, well, thanks for joining us. To the audience, please make sure to request the one-on-one meetings with the connect button. Jeff, thanks for having us, and excited to see what else is coming down the pipeline from Data Pulse.
Great, thank you, Tim.
If you'd like to meet with any of the data providers on this panel, please indicate your interest now. And now, a special data drop from Ensemble provider, the Depository Trust and Clearing Corporation.
Hi, my name is Matthew Bergerman. I'm a product manager at DTCC and our data services team. I'm here today to tell you a little bit about a product called Money Market Kinetics and a recent study done by Herb Blank of Global Finesse and team. And Herb, if you want to go ahead and introduce yourself.
Yes, I'm the head of the investment products practice at products and strategies practice at Global Finesse. And I'm a 40-year veteran in the quantitative investment field.
Great. So I'm going to just pull up some slides and just give people a quick understanding of just what is Money Market Kinetics before we get into the discussion about your recent study. DTCC is a market utility. We do a lot of post-trade activity, and our group in data services takes a lot of the content from that post-trade and creates products like this one. In the case of Money Market Kinetics, so Money Markets is a $3 trillion fixed income market that's not particularly well known in the US. It covers things like commercial paper and institutional CDs, which are very short-term bonds issued by corporates to finance a lot of their short-term activities. The product itself shows settlement data on those different issuers, and users will see things like inventory, liquidity, valuation, interest rates. Here's a quick snapshot of just what a little bit of the data looks like. There's usually about 3,000 or 4,000 transactions per day, and there's history back to 2014. And you see things like who the bond issuer was, what type of bond did they issue, information on rates, principal, settlement, and how much settlement activity is going on. So with that, we wanted to shift over and talk to Herb a little bit about these two recent studies. And maybe we'll start, Herb, with the bond manager study and tell us first a little bit about the methodology you used to conduct.
Yes, we looked through 6 years of data from Money Market Kinetics and found that companies that we were looking at issuance settlement patterns that had come from different issuers, and we were looking for if there were early warning signals for financial health deterioration. And in the bond manager study, we looked specifically to see new settlements from the same issuer that were larger than in the amounts they had normally issued in, if that was an early warning signal as to CDS spread widening and financial health deterioration. And we found that there were a number of cases that there's good evidence that indeed this is a good early warning signal, or an earlier warning signal, if you will, for financial health deterioration ahead of the CDS spread market. Then taking that information, we looked and see if there were implications for equity managers, particularly in the value equity managers and hedge fund traders. And indeed, again, equities that were sensitive in the health area, these were early warning signals. These signals tended to be stronger with companies that were in the non-financial sector than in the financial.
Thanks, Rob. That's great. And maybe just to give people listening a little bit of context, this concept of spikes, maybe you just want to talk a little bit about what you mean by spikes and what that mathematically sort of means, just high level, of course.
In a different month, a corporate issuer would issue, say, our settlement. There would be, say, $300 million worth of paper generally in a month or a quarter issued. And then all of a sudden, there were $400 million worth of paper that had settled in the next month. That was the kind of thing we were looking at.
So thanks, Herb. This is a really good overview. For people who've listened in, please take a look at the URL at the bottom of the screen, and you'll see the two papers are up at the top of that webpage, and you can download them both and read them, and then we'd love to hear any feedback you have. Thank you.
If you'd like to schedule a Connect meeting with DTCC, please indicate your interest now. Coming up next, cryptocurrency. Discussing different exchanges, Coinbase, and more. Joining our panel today is Keenan Singh, Director of Customer Success at Accern, the most advanced no-code AI for financial services. Alex Mascioli, co-founder of Trade the Chain, a sentiment-driven cryptocurrency alerts dashboard that can be used to predict fast-moving trade opportunities. Sasha Gabali, U.S. Operations and Data Analytics Lead for Kaiko, a provider of historical and real-time cryptocurrency trade data, order books, and aggregated prices. Please welcome your moderators, John Najarian, co-founder of Market Rebellion, the best options, education, and trade ideas services in the industry. And now, BattleFin co-founder, Mark Lopresti.
Good afternoon, folks. This is Mark Lopresti, co-founder BattleFin, coming back to you once again for another fantastic, hard-hitting, inspiring BattleFin Discovery Day. Today, we are joined by some of the folks that are at the forefront of the nexus of alternative data and cryptocurrency. This is big stuff. We think this is one of the first webinars, virtual or otherwise, to cover this topic. There's a lot to cover, and because of that, I am joined by my dear friend, business partner, Market Rebellion co-founder. We call him Dr. J, Dr. Doge from time to time, the great John Najarian. John, thanks for being with us today.
Great to be with you, Mark, and with all of these datapreneurs in the crypto space. I love it. It just shows you the leaps that BattleFin is making into this space, Mark, because there are so many different inputs for crypto that are significantly different than equities or bonds. And I think we have some real cutting edge information from these three gentlemen.
I couldn't agree more. And you know, John and I are just off of the beginning of the Return to Live Events Tour 2021, happy to say. Most recently at Money Show down in Orlando, where we were talking Bitcoin, talking crypto. And the week before that at BTC Miami, where just a few people showed up to hear about the latest technologies and what's going on in Bitcoin and cryptocurrency. And John, I mentioned BTC Miami because there's a particular category of data and alternative data in crypto that's definitely getting a lot of attention these days. And I think we have an old friend of ours, Alex Mascioli, that's here to talk about it. you want to do a quick intro to Alex and Trade the Chain?
Sure. And folks, we're going to get a quick 2 minutes from each of these gentlemen about they're going to be able to share their screens. As Mark said, Alex Massioli is a good friend. Sasha and Keenan also have some great information to share with you, data that I think is pretty critical to analyzing entries and exits in crypto. Alex is the founder of Trade the Chain, and it's a fabulous site as well as a daily YouTube streaming information site. So Alex, if you would, please give us about 2 minutes of screen share, and then we'll take it up with Sasha.
Sure, absolutely. Thank you, guys. So Trade the Chain, we're for retail investors, and basically what we provide access to actionable sentiment indicators and real-time actionable alerts, SIG-Dev trading, as well as we have a price prediction algorithm. And for us, it's our community that's at the core of it. We have about 2,000 retail traders right now that utilize our dashboard in order to make trades, whether they're swing trades, intraday trades, or intra-month trades. So it's really become a passion of ours, and the platform has really taken hold as individual retail investors find it as useful as fundamentals or technical analysis as they would in equities.
Right. Well, thank you, Alex. Very precise and concise. Let's bring in Sasha from Kaiko. Sasha, if you wouldn't mind giving us a little screen share and a little description of what Kaiko does for crypto analysis.
Yes, pleasure to be here. So at Kaiko, we've been around since 2014, and what we do is we focus on market data. So all prices, and we collect, normalize, store, and then redistribute all the market data that comes from centralized exchanges and now even decentralized exchanges. So we have both historical and real-time data that we provide to many big institutions in the space. We have a lot of different data types, going from very granular data coming directly from the matching engine, but we also do higher level aggregation of this data. And finally, we also have a lot of research that I invite you to register to our weekly reports that are published on a weekly basis, and we also have higher level market reports published on a monthly basis. So very excited to be here today.
Great, thank you very much, Sasha. And no delay for Keenan from Acern. Keenan, if you wouldn't mind, he's the Director of Customer Success, which is a title that I love, Keenan. Please tell us about Acern, sir.
Absolutely, and happy to be here. So a little bit of background on Acern. We're founded in 2014, and we work with financial institutions, hedge funds, banks, and so on with traditional equities as well as cryptocurrencies, which we've seen a major uptick in over the past few years. And we work with both unstructured data using NLP to derive sentiment analytics, and we can output the dashboard into the data into a dashboard like this. And other users can utilize the structured data to do forecasting, to get predictions. And we've seen users want to predict price of cryptocurrencies using sentiment data, price data, and so on.
Beautiful. Thank you, guys. Obviously, they follow directions very well because nobody was even close to 2 minutes there, but that's perfect because it gives us more time for the debate. So we'll start with this one if you guys don't mind. Let's say that the futures are in backwardation. So in other words, the spot price of Bitcoin is a lot higher than the futures contract. This is happening for what, the first time since 2018? Do you think this is a signal of the lack of interest from the institutional buyer? Who wants to take it first, Keenan or Sasha?
I'm happy to take it.
All right.
I think some of the backwardation, it definitely can be a bearish signal, especially when we think of, let's say, backwardation with something like oil. But since Bitcoin is a bit more speculative in nature, and there's a lot more of the unregulated exchanges that involve some of this institutional interest, I would say the backwardation here is overall more speculative in nature and is less bearish than when we would see something like oil. And I think, Bitcoin, it had a great run, and it had to take a dip at some point. So I think this is just the first of many anomalies that we'll see as more institutions get into space.
Beautiful. Anybody else want to take a shot at that one?
Yeah, I give a little bit more on this as well. I think what's really interesting in what we're seeing right now and the crypto derivative space, and this is the sort of the data that we're looking at Kaiko as well, is the dynamics between the retail markets that are now getting more and more access to those derivatives and the institutional markets. As to whether the backwardation is a bearish or bullish signal, well, it's sort of a chicken and egg problem, right? And very often you see those being correlated with changes in prices. So is it because the market is bearish that you're seeing this, or the other way around, right? But it can often be associated as a sort of sentiment of the space, and you do see this in flippenings of the funding rate in the perpetual future contracts.
Sasha, one more quick one before we move on, and that is obviously next Friday we've got a big Ethereum expiration for the options. Do you guys have any insight into that? As far as in the past, this has been a nervous time for both Bitcoin futures and options when they expire, as well as Ethereum. It's usually a double-digit move. So far this year, it's been to the downside first and then a rebound. Do you guys have any data that you can share with us on that?
Well, so it's obviously as you get closer to maturity, the prices between the spot and the future should converge. Otherwise, you have large arbitrage opportunities. And the basis trade in crypto has been fairly large compared to more traditional markets in the order of 20% a year when annualized. As to what's going to happen in particular for this event, I'm not sure. I'd have to look at the data, which is something we do have. I'd look also at the open interest and seeing how many of those contracts are out there.
Gotcha. Well, this next one, Mark, I'm going to need your help on, because you and I have been sitting with Mr. Wonderful, Kevin O'Leary, a lot on this topic. And he and Elon Musk are probably the two most quoted people on the subject of energy consumption by miners being such a hot topic. So Mark, what do you think from our conversations with Kevin that you want to throw out to the panel about, is this going to be something that hurts these cryptocurrencies even more than it has so far? Or when the truth comes out, is it going to be something that maybe this was an overreaction?
I mean, well, certainly, John, that is one of the hottest topics of the day in crypto, particularly around Bitcoin mining. It was one of the main topics at BTC Miami. I do blame Kevin a lot, and I hope he's watching, so he knows that we are blaming him directly for this. And if he's not, we're going to guilt him on that anyway. But I do blame him and Kathy Wood and others for really bringing this to the forefront, kind of tongue in cheek, because at the end of the day, as you know, I am a big investor in renewable energy. So this is something that is near and dear to my heart. And it did bring to the forefront of the conversation just how much energy is being consumed by Bitcoin mining, how much of it's being consumed energy-wise from traditional energy sources, where in other parts of the world they burn coal or plastic or whatever it is that they do that's really horrible and everybody hates. But the question I'd have for the group, right, is along these lines. So there is a thesis that says, and I'm a believer in this thesis, so I'm gonna give you a hint here, but there's a thesis that says that once the mining problem relative to renewable energy, once the miners become good corporate citizens and go and start mining from renewable energy sources, it will bring more of the institutions off the sidelines and into the space, right? To put it on the balance sheet, to trade it, to expand the offerings. There's really no doubt, as I've said, and you've heard me say many times, I'm a big believer that the institutional adoption curve of Bitcoin and crypto is directly correlated to the acceleration in price during the first quarter in particular of this year. So my question to the team, and I'll kick it over to Alex, because He's been uncharacteristically quiet so far, other than his 45-second intro. Do we think that that is one of the things that is keeping the institutions off the sidelines, Alex? And how can we use data to try to know whether it's about the renewable energy story or not? How can we use data to see when the institutions are going to creep back in, and hopefully before we read about it on Coinbase, which is usually 24 to 36 hours after it happened?
Sure. I mean, and you know, I'm chiming in here for the first time. I'm not going to say things as eloquently as my counterparts here on the panel. I'm just an opinionated capital market guy. You know, I don't know that it's, first of all, you know, the renewable energy argument is a good one, right? That's always going to be good and better for the environment. That's always going to pique people's interest into playing into a market. I don't know that that's what's keeping institutions on the sideline more so than the Shiba Inus of the world that are in here. So, you know, that's something that it can be debated, I guess. You know, when it comes down to the energy argument, I really feel that you know, we need something, we need a barometer, we need to put it against a metric. And until we get an intrinsic breakdown of energy use by, say, the JP Morgans of the world and the other bulge bracket banks to the Bitmains of the world, I don't know that it's a fair argument, to be honest with you. And I think it's split pretty 50-50 in the community as of right now, whether it's terribly bad or it's terribly acceptable.
So thank you for that, Alex. So let's stick with that institutional theme, though, and getting away just necessarily from alts. And Sasha, how much behavior do your data sets show relative to institutional activity, whether it's institutions that are already in the marketplace and building positions and getting ready to make the next move, or whether it's trying to anticipate, looking at whether it's the sentiment or the technical data that there's going to be increasing institutional participation? What kind of insight can you give us?
Yes, so there's a couple of things you can see in the market data. For one, if you look at the trade size, the average trade size that comes out of the matching engine, this is evolving over time, and we've been tracking this, and you can follow this in different marketplaces. Usually exchanges like Binance, we have a lot more retail traders than if you look at a more institutional exchange like LMAX Digital, for example. So you can look at the volumes on those exchanges, see how those evolve over time, and then you can have an entire different picture when you start looking at liquidity. So how much is sitting on the order book? And when you place a large order on those platforms, by how much is this going to move the market? So this is something we look at on a weekly basis that we publish in our reports. And what you've seen over time, especially over the past year, is that liquidity has improved a lot. And the depth of the market also has fairly improved, apart from instances where you have market crashes.
So John, Sasha touched on a little bit of whale watching, right? Maybe comment on some of the whale watching that you do and that we do with Market Rebellion. And then I would love to get Keenan's view on what the ACERN data is telling us in terms of institutional participation.
Absolutely. And, you know, ESG, just environmental topics in general, we've seen a major uptick over the past 2 years as it relates to institutions just looking for more ESG friendly companies. And as it relates to our data around crypto, over the past 6 months, just discussion of ESG topics around cryptocurrency has tremendously increased. And like Alex said, I don't think this is keeping institutions away or keeping them on the sidelines, but I think they're trying to ascertain what's the best ESG investment to make as it relates to cryptocurrencies. And there's been some discussion that Ethereum and POS sort of cryptocurrencies are more green than Bitcoin. So I think this overall idea of using renewable energy, becoming more ESG and environmentally friendly for cryptocurrencies, I think there's a lot of new innovation coming to the space, like El Salvador wanting to use a volcano. Not sure how well that'll work, but you know, new ideas will bring us a more green cryptocurrency space.
Yeah, and you know, Kathy Wood is quoted as saying it's already over 70% renewable. I don't know if she's right. I would love to be able to discern that, and I don't know that the panel can do that right now. But if she is close to right, Mark, we're going to see a massive mea culpa out of Mr. Musk about this?
Well, I think one big question there, sure, I mean, for sure, the energy mix is a huge factor there. And you have to look at this because there are clear economic incentives for free electricity, for stranded sources of energy to be used for that mining. And that actually can benefit those means of production that are greener and more renewable. But with respect to the amount of energy being used, sure, this is not a negligible amount. But to me, the question there is, what is the utility that the Bitcoin network brings? And there's a great dashboard that was built by the Cambridge Center for Alternative Finance in the UK. And I think I don't know when they updated the last data point, but they showed that only inactive home devices, so basically idle devices sitting on a plug at home, basically consume the amount of power that the Bitcoin network would consume for 2.3 years. So what has more utility? Storage of value that people in outside third world countries can use that is not dependent on directly on the government and on the financial stability of their finances, or idle devices that are just sitting at home. And that brings a more philosophical discussion, which is what is this utility, and is it worth spending energy for this?
I want to just add one real quick thing, Mark. I'm sorry.
Okay.
To Sasha's point, what he just said was so particular, and addressing Elon Musk and what comments he had coming out. I think he needs to be a little more responsible in what he says. So if he's going to talk about energy consumption and then reduce guidance on whether it's paying for Teslas with Bitcoin or anything like that, then he needs to come out with the other side, like what Sasha said. He's at the helm of a company that owns a solar company. Come up with a solution-based flip side of that argument instead of just knocking Bitcoin around. That's my rant.
Well, so Alex, so I love that rant, and I think there's a reason why we didn't see Elon at BTC Miami, because I think he would have been tarred and feathered and probably dragged out of the conference facility. It looks like we briefly lost Dr. J, but we're going to keep going, and he'll come back on. I do have to apologize to all of you, though, because I seem to have sidetracked and derailed the data conversation and gotten into a renewable energy and ESG philosophical debate. I know you're all smiling because it's one we'd love to have. Maybe we'll have you back for another session. Let's get back to the data, though, and I'm going to turn it back to you, Keenan, because you guys, if I understand correctly, you came from the traditional equity alt data side, right? From a business that we at BattleFin know really well. Tim and I and the team have been doing this for almost 8 years now. Very, very hard to believe. The equity side of things for alternative data is how we got our start and still remains our bread and butter, but we're extremely interested and we want to be a big part of the crypto side of alternative data. Tell us just briefly about how your company has made that decision to pivot and what you took in terms of the lessons learned from being a leader in the traditional equity-related alternative data space into crypto.
Yeah, absolutely. And I think, over time, our platform has continued to expand and encompass more types of entities. And we can think of those entities as traditional equities and cryptocurrencies. And over the years, as we've seen more institutions get involved, and not only do they want equity data, but then they're like, do you have any crypto data on some of the top cryptocurrencies? And they're mostly interested in that sentiment use case. I think sentiment is a main driver, whether it's from social media or news. And they're all looking for some quality sentiment data from the smaller funds to the larger hedge funds in the space. And they're looking to ascertain, sentiment from various topics, from the renewable energy view, from the just Twitter, from news. And I'd say the big driver we're seeing is, everyone's going to eventually move into crypto. There will be, trading desks at JP Morgan, at Goldman Sachs in the future. So we're trying to build our platform in a way that no matter what you trade, no matter what asset, you'll have the ability to build data sets and ascertain sentiment and other analytics on the assets you're looking for.
But Sasha, it's not all about sentiment, right?
It's not just about sentiment. Although
tell us what else matters.
So you actually do have proxies that people have been using between market depth and sentiment. But then just looking at the actual market data can be very difficult in the crypto space because you have so many exchange places, you have so many tradable instruments that just asking for a simple price, what is the price of Bitcoin right now, can be challenging. And so there's a huge need currently for more robust methodologies and things that take into account looking at fake trade volumes, looking at what exchanges you take into account, how executable the prices you give are, and taking care of outliers, being sure in terms of market dislocation that you don't take into account prices that are completely off and not synced with the rest of the market. So at Kaiko, we've been working really hard on taking an infrastructure approach to this problem. And what we do is we have a flexible, we've worked on a fully flexible solution for digital asset valuations, where you can select the exchanges you want to be included, the way you want the calculation to be done, and everything is fully transparent, because at the end of the day, we always go back to the most granular tick by tick data that comes directly out of the matching engine. And that's going to be critical we've worked with TP providers, exchange traded products, and that's going to be critical in having those highly regulated, transparent pricing methodologies to have ETFs, funds that give access to cryptocurrencies exposure to people, whilst having a price that is not easily to manipulate.
And to add a little,
please, go ahead, Keenan.
Something that Axern has recently launched are predictive modeling capability in the platform. And we've seen an uptick of cryptocurrency clients who are taking data like that, the order book, the liquidities, the futures, the on-chain metrics, pairing it with sentiment data and price data to derive directional predictions. Bitcoin on a next week horizon, is it going to go up or down? And it utilizes all of these different features and machine learning to help you build a model to make those predictions.
So if you have that product available now and it's accurate, consider yourself one more subscriber, because I'm going to send you my credit card information at the end of this call. Joking aside, is that something that's readily available on a consumable basis, Keenan?
Yep. Data scientists have been using it at these various firms to take in all of this structured data and then build their machine learning models and predictive models to generate these insights.
Very cool. Very cool. I'm going to get a little bit philosophical for a minute, but there's a point to it. I'm going to bring my friend Alex back. And Alex, for the audience, in full disclosure, you and I have known each other for just a year or two, not necessarily in the crypto context, but we do go back a long time, and it's been absolutely wonderful to follow your success as a thought leader in crypto and with Trade the Chain, which has obviously been fantastically successful. One of the things that gets us excited, by the way, I'm going to be looking for your check in the mail in the next 4 days. But one of the things that gets us at BattleFin so excited about cryptocurrency and blockchain and the nexus of cryptocurrency and blockchain and alternative data is it's all data, right? I mean, that is the DNA of blockchain and crypto. There's nothing else but data. It does, however, beg the question that if it's DeFi and it's all data and it's all sort of available, is there not the same information arbitrage that exists, one could argue, in traditional equity and equity options and commodities? Meaning, I can go to any one of a half a dozen free websites that give me something that looks not unlike, sort of a NASDAQ level 3 order book. And it's pretty effective, with the large block trades and showing me resistance levels and things like that. And we look at those things and watch them, for whale watching and looking to see, where we think that, the floors are and the resistance levels are. Debunk that for me. There's still obviously a demand, a need, an opportunity for alternative data, for proprietary alternative data, because not everything is just readily available. Am I right about that?
You're absolutely right about it. It's not, I'll put it in layman's terms. It's not as readily available by just dropping webhooks into various sources. Sasha and Keenan, their companies deal with the institutional side. They're all next level type data. You have data scientists. All our firms have data scientists. We have scraping. We're normalizing. We're capturing data contextually. We're eliminating, for instance, on our retail platform, we're eliminating pump and dump bots and various other metrics in social media, and doing it on a rapid basis in order to formulate sentiment scores. So by no means are any of these companies up here off the shelf, readily available data. There's a lot of work that goes into normalizing it and delivering it to the end consumer.
Sasha, pull on that thread for us a little bit. Just because it's blockchain, just because it's DeFi, doesn't mean that anybody with a computer and an internet connection, hopefully one better than John Najarian's internet connection, can get this data without having to go to you or to Keenan or Alex. Help debunk that.
Yes, and I mean at the core of our business is economies of scale, right? Because getting that data, normalizing it, if you want from an exchange or another, they all have different ways to access the data. They provide, if you want to go to an LMAX, you have to build a fixed connection. If you want to go to Coinbase, you will have to use REST or WebSockets, and then you have to store that data and then normalize it across exchanges and then aggregate it. And we're doing this just once, instead of having everybody doing it. So we do it once, we bear the cost once, we do it at scale, and then it's just cheaper. And also, most of those exchange places do not offer this historical backlog, right? So in addition to just having the historical backlog from our services, we also have an extra layer of trust, which is we do show the data points as they were shown to the market in real time. So these cannot be manipulated by the exchanges after the fact. We have the timestamp, we collected them in real time, and we can tell when we got the data point. And that's been really important in crypto, where you have all those fake volumes and sometimes the candles don't match the tick by tick. So we do most granular level tick by tick, and then we calculate ourselves all the aggregations.
Sasha's point, you still have to remember how young and nascent the industry is, no matter how many headlines it's generating. You go back 2 years ago, a crypto hedge fund could drop into their WebSocket or API with an exchange, and there was no way 9 out of 10 times of getting historical data. And so those are like simple problems in the equities world, but there's still difficult data problems to overcome in cryptocurrency and the blockchain.
Well, so some of our key takeaways, guys, since we're winding down, are number one, sentiment is a big thing that you should be watching. And that's what Alex and Trade the Chain would be saying that you should focus on. Xcern says they allow users to track their own topics, right, Keenan? They can track their own topics, or companies with sentiment analysis on top of that, and machine learning. And then Kaiko, biggest is enterprise using cases with reliable prices. Guys, would each of you like to have 30 seconds to wrap up, starting with perhaps Alex Massioli?
Sure. I feel like I'm getting a lot of back half preferential treatment here. So I just want to wrap it up by saying this. Unlike the traditional equities market and options market, sentiment is even more powerful as a trading tool for those type of investors. With very opaque fundamental analysis, sentiment provides that other leg, and where TA may provide confirmation. So I think it's more important than ever that sentiment prevails and becomes more of a front focus in crypto.
How about you, Keenan, sir?
As we've talked about, all of this data, blockchain, DeFi, and what, prices and order books, liquidity, there's more and more data that's needing to be consumed and analyzed. And, we have our platform with NLP and machine learning to make it easier to sift through that data, layer on top analytics, and then use it either for, early warning signals or some sort of predictive modeling. And I think just in the future, we're gonna have even more data. So tools like that will be necessary to make the most of the data we have.
And Sasha, if you wouldn't mind winding up for us.
Yeah, for sure. And you know, I think it's a really exciting time for doing data in the crypto space, because of all the applications. We're basically building the pipes to provide all that data infrastructure, and that goes not only to providing that data to institutional investors, building financial instruments for the space, that also goes to providing data to DeFi contracts, to smart contracts, and we provide data on Chainlink, Tezos, and other protocols. And as the whole industry matures, we'll see more and more applications of all that data. And beyond enterprises and institutions, I would really encourage people to subscribe to our weekly reports and newsletter that really show what can be done when you have quality data.
So guys, before we wrap it up, thank you, John. Before we wrap it up, I just want to go around the horn really quick, and we can go in reverse order, starting back again with you, Sasha. Tell us in 60 seconds, what are the subscription options for your data sets?
So by the very institutional nature of our business, we are very custom. So if you come to us, we'll really understand your use cases and then provide something that is entirely bespoke to your use case. And that can go in terms of the breadth, in terms of the types of instruments you need, really understanding your business use case to provide the best tools to solve it. And we are really good at this, right? We have direct one-to-one support. We'll be very responsive, reactive. We have teams and both in Europe, in Paris, and in New York City as well. So that for us, you know, the user, the client experience is at the core of our values and philosophy. We do think that having quality services is what really most important. And we leverage all the other enterprise clients that are, you know, using our data, identifying, you know, dislocations in the market so that we actually know and can patch and fix things before other can even know there is an issue. And so this is where, you know, the network effects and having this institutional focus is really key.
So high touch institutional client base. CERN, Keenan, you guys have both retail and institutional. How can we buy your product?
Definitely. So our platform is consumption based. You know, if you come to us with a given use case, we can start out small, get you on the platform, and then from there, as you scale up and build more use cases, let's say your first one is Bitcoin with a ESG topic, and in the future you want to build a predictive model on the top 100 cryptocurrencies, you know, your consumption will increase, and that's pretty scalable with the different packages we offer. So, you know, just come to us, we can nail out your use case, give you what it would cost, and then from there we could talk about what scaling up looks like.
And Alex, apart from giving your audience your personal cell phone number, which I'm going to do, how do we buy and subscribe to Trade the Chain?
Sure, I'm gonna go into the shameless retail shill here. So it's very front and center. There's 3 different packages. We're a membership based platform, and we have a members only community. So our thousands of members actually work together, helping each other out. But then you get all the dashboards with the sentiment analysis and trade alerts that I showed in the beginning. So to put it in a nutshell, while Sasha and Keenan, they're on the institutional side and they have such a wealth of knowledge. What we do is we kind of water that down, not water it down, package it up for retail consumption for people to easily understand that don't have crypto analysts in their kitchen.
Fantastic. Well, John, any penultimate final words before we sign off?
Just that the data is even more important in crypto than it is in stocks, and it is more fraught with fraud in some cases. Obviously not all, but in some cases there's out and out painting of the tape that existed when we had, you know, 50 stock exchanges, for instance. So it's not new, nothing new under the sun, but because it is so easy to launch an exchange and so forth, I'm not surprised that all 3 gentlemen have to do a lot of parsing through the data to get out the bad operators.
John, thank you as always for being with us. And thank you, Keenan, Sasha, Alex, for a fantastic panel. Folks, thank you for joining us. This is the last panel of day one, BattleFin Discovery Day Virtual, June 2021. I want to tease a little bit. Look out for more cryptocurrency, blockchain related alternative data content coming out from BattleFin soon, maybe very soon. More on that at a future date. We look forward to having you guys all join us tomorrow. With that, we're going to sign off. Thank you once again for joining us. Tim, Todd, Jordan, back in the studio. Back to you guys. Thank you so much.
If you'd like to meet with any of the data providers on this panel, please indicate your interest now.